Okay, today we're going to be looking at a playbook trade in NVDA that I saw today and really liked and wanted to break down for everyone. So we'll start here with the context of the overall market. This is the Qs on a 15-minute chart, looking at the last 10 days or so. This red line here was the previous all-time high, and this was the day that the CPI number came out, which was in line with expectations, which appeared, based on the reaction, to be better than what the markets were expecting. I think it seemed that the markets kind of expected a worse reading, but since we were in line with the expectations, the market was bought and trended all day. We peaked out at 454.69 the next day, and then came back down, and we've kind of been slowly consolidating slash moving lower in the past 2 days, but remaining above that previous all-time high, kind of using it as a bounce point today in the late afternoon. So that's the Qs. The same or a similar story is true of the SPY. And we actually gapped above the previous all-time high on that CPI day, peaked out the day after, sold off a bit, and then today was mostly consolidation for the SPY. Okay, here's our chart of NVIDIA. Obviously everyone knows we've been on this huge uptrend all year. Peaked out at $974, got up close to it about a week or two later, sold down. This is our April sell-off that was heavy semiconductor selling, and then we've been bought most of the way back up into the 950s. And so if we look at so here's a 15-minute chart. When we came back up after that sell-off, we had this period of consolidation between 880s and up towards 920. And in the last couple days, we broke back above that channel we've kind of been consolidating in. So 3 days ago, we trended up all day, peaked out at $958, and then sold off. And then coming into today, we sold down a bit, but we'll talk more about today in a moment. Coming into the pre-market session today, there was news that Microsoft would be planning to introduce some AMD AI chips to rival the similar NVIDIA components. And so AMD was up 3% in the pre-market. NVIDIA was also up a bit in the pre-market, although selling off a bit into the open. But this news more or less directly competed with what NVIDIA does and their AI chips that have given them so much hype and fueled much of their upward movement. So I felt like the news was largely negative for NVIDIA because it creates more competition in a space where they've seemingly been dominating. And so coming in to the open market, we sold down, we're bought back up, sold down a bit lower, bought up, and sold down to $930 and around $930, consolidating above $930.70, $931-ish. And this number is important because this trade is one of the you make in the later part of the day, because the price action for the whole day is important in defining how the trade will play out. So basically this is what we'd call a bouncy ball breakdown pattern, where you see the sell-off into a level and then the stock is bought back up. So we see this buying back up above 940, above VWAP, but we never get above the point we initially came down from. Then we see selling down, consolidation, but we sell back down right to not quite as low, but around that same level that the stock was consolidating at the bottom at. And then we get bought back up a bit, but we don't get bought up as high as we did previously, and that's important for this pattern. So this was our previous high when we first began to sell off, about 947, down to 930. We bounced to about 941-ish, back down to 930. Then we only go as high as 935-ish, consolidate, but slowly move lower, and then once again hit $930. Bounce once more, lower again, 934. And you can see that the bounces are getting lower and lower Hence the bouncy ball pattern. When you drop a ball, it's never going to bounce as high as it did the first time or the time before. Until it's sitting on the ground. So that's what this pattern is named after. So we bounce, we come down, we bounce again, come down, bounce even lower, come down, and then hit $930 again. We bounce a couple dollars and $932 level, and then we come right back down to that $930 level, and we consolidate right around here for a couple minutes. And if we zoom in here, you can see throughout this whole section of bounces and selling back down, and lower bounces and selling back down, and even lower bounces, our volume is overall average dropping. You can see just visually that the volume is decreasing as the day goes on. The less people are buying, and once we get the break of this $930 level, we see a huge inflow of volume. Looks to be, just visually here, about more than 5 times the volume of the previous 1 minute candle here. And then once we get that break, we get that huge influx of volume. Then we get 5 straight minutes of down volume before a little bit of buying comes back. But with this increased volume, with this pattern, you can short this stock at the break of that level with a stop above the high of the previous bounce, so around this $932.50 level. So you're selling 930, 950, somewhere in that 50-cent range you could sell, with your stop about $2 above. And once this volume comes in, once we break down, we move down a full, the low of the move, $918, so that's a $12 move down, so that's $12 down versus $2 stop. The opposite direction, say you only caught $10 of this move, got it down into $920, that's still a 5-to-1 risk reward you're seeing, which is a really solid risk reward for any trade. So as long as you're here ready for it, recognize the pattern as it's approaching, as it's developing, this is a really easy trade just based off of the price action and the volume changes. After the culmination of this move, the stock did rebound a bit, but then sell off a little bit more. So even if you just held this all through the rest of the day, you were still making 6 points from 930 to around 924.79 was the closing print. So for me, this is I've playbooked a number of these bouncy ball breakdown trades because they happen, I don't want to say frequently, but they happen every now and then, and they almost always behave the same way when you see these sequential bounces that aren't quite as high but come down to the same level. So this was the trade for today. Pretty straightforward. Price action movement kind of defined the trade as well as the volume like I was talking about, so definitely worth putting in the playbook. Let me know if anyone else saw this and traded it as well, or if you looked at it slightly differently, or how you looked at it. But that's going to do it for today. I hope everyone traded well today, and remember to trade your playbook and playbook your trades.